Following last week's interest rate hike, Fed Chair Jay Powell said central bank staffers are no longer forecasting a U.S. recession. Our next guest says while things are developing as they should for a soft landing, it's still too soon to declare victory.
Here we want to bring in Peter Anderson, Chief Investment Officer at Anderson Capital Management. Peter, welcome. Good to have you with us. Okay, you heard what Bob just said. Stocks good, consumer good, economy, fewer recession worries today than there were 6 months or a year ago. Inflation coming down. Looks like last innings of the rate hike regime here. So why is Peter Anderson raising cash to the highest level in a decade or so?
Well, first off, I agree with all the points you mentioned, so I remain an optimist. So this is going to sound a little bit contradictory, but I do think we have to get a little bit sober that only 4 of the 11 rate hikes are a year old, Tyler. So that's about 2.25% rate hikes that we're seeing impacting the economy. We still have 3% to play to work itself through. So I'm a little bit hesitant to see if the Fed has done such a great job that this soft landing will actually happen. I do put a high probability on it, but I'm just a little bit cautious as we go into the second half of the year.
But you've been in the no recession camp for a long time. You're not changing your tune here, are you?
Inflation readings have moved considerably lower. The Personal Consumption Expenditures Price Index increased 3.2%, which was in line with expectations, but down sharply from 4.8% in the third quarter. Excluding food and energy, the chain-weighted index rose 3.9%, down from 4.7%. Some market strategists have predicted that a strong fourth quarter is yet another sign the economy may avoid a recession and increase the likelihood of a soft landing.
To 5.25%. That's the highest base rate since 2008. The bank says it expects inflation to be halved by the end of the year. That's one of the government's key targets. The increase puts pressure on borrowers, mortgage holders and households struggling with budgets. The Chancellor, Jeremy Hunt, told GB News the government's plan, though, is working.
Well, the Bank of England forecasts today say that we will avoid recession, and in a year's time we'll get inflation down to about 3%, 2.8% I think is the number. So although it's very tough when interest rates go up for families or for businesses that have got loans, what those forecasts are saying today is that if we stick to the plan, it is working and we will end up with a soft landing and we can avoid a recession.
That's right, Scott. My big takeaway from this week is people are really fully embracing this soft landing thesis that's been percolating all year, but it's been turbocharged this week among individual investors, institutional investors. We're seeing the Fed come around to this idea of a soft landing and saying that they think a recession could be avoided. One warning sign, though, is I was looking at some Deutsche Bank data recently, which showed that 8 of the past 11 hiking cycles were met with a recession. However, they usually didn't arrive until around 2 years after the Fed started raising interest rates.